Why did Meta's stock fall despite strong earnings? It's a question that has left many scratching their heads. But as we dig deeper, the answer becomes clearer, and it's not as surprising as it might initially seem. Meta, the social media Goliath formerly known as Facebook, recently reported its first quarter earnings. The numbers were impressive, with sales reaching $36.46 billion and earnings per share standing at $4.71. These figures surpassed estimates, painting a picture of a juggernaut that continues to dominate the digital landscape. However, the stock market's reaction was less than enthusiastic. Meta's stock fell by a staggering 10%. This drop came as a shock to many, especially given the company's strong financial performance. But the devil, as they say, is in the details. Meta's forecast of slower growth and increased expenses, particularly in its metaverse segment, raised eyebrows among investors. This cautionary outlook triggered a sell-off, leading to the stock's sharp decline. The stock market operates on future expectations, and in this case, Meta's forecast of increased expenses and slower growth outweighed its strong earnings. This event is not unique to Meta. The broader tech industry has seen similar trends. The Nasdaq, for instance, experienced a 4% drop, marking its worst tech sell-off since 2020. This volatility was driven by concerns over inflation and comments from the European Central Bank, underscoring the sensitivity of tech stocks to broader economic indicators. The story of Meta's stock decline is also a story of its CEO, Mark Zuckerberg. Despite the stock's fall, Zuckerberg is set to receive a substantial dividend payment, adding to his estimated fortune of around $173 billion. This situation underscores the often disconnected realities of stock market performance and executive compensation. In conclusion, Meta's recent stock decline, despite strong earnings, is a complex tale. It's a story of high expectations and cautionary forecasts, of broader economic forces and individual fortunes. It's a reminder that the stock market is not just about numbers, but also about perceptions, expectations, and the broader economic context. And, as always, it's a reminder that, in the world of finance, things aren't always as they seem. Remember to dig deeper, look beyond the headlines, and always keep an eye on the broader picture.